Hello and welcome to Biogas TV, the leading biogas industry live streaming TV show where we air every Monday at noon Eastern. I'm Paul Green. I'm your host. I'm pleased to be here with my co-hosts Alex McFarlane of RNG Connect and Drew Puchot of Equus Energy, who does our offtake roundup segment at the end of the show. Today, we are very pleased to have with us Mr. Peter Behrle of PB Renewables as our featured guest. As a leading industry advisor in the RNG space, Peter helps guide and coach investors in the biogas business and publishes an industry-leading regular newsletter on project economic trends. Peter's here today to talk with us and present an RNG economic driver review. We're also pleased to announce Biogas TV Season 6, which is going to be a summertime online trade show called Biogas Power Brands. Alexandra Funk from my team is here with us today. Hello, Ali.
Hi, everyone.
So tell us about Biogas Power Brands.
So just a little bit, we will be airing the Power Brands from July 20th through September 28th, kind of as a virtual online trade show. There'll be 11 sessions in total. So just make sure to keep an eye on your email on how to participate. We'll be sending some more information out shortly.
Cool. Thanks. So today, put your questions in the chat, and copies of Peter's slides will be sent to all participants at the end of the session today, and you can find us all on LinkedIn. Past recordings are up on youtube.com/@Biogas TV. So Peter, welcome to Biogas TV. The floor is yours.
Alrighty, I'm going to do this today with a slideshow, as Paul mentioned, so let me get that in place.
Now, Peter, did Paul warn you that we might interrupt you mid-slide or during transitions?
As long as your questions are perfect and I'm capable of answering them,
Okay.
I'll accept any interruptions.
If it's a stupid question, feel free to say that's stupid, Alex.
Okay. Okay, I'm Peter Behrle. I've been in the renewable space for 20 years. I founded my company 20 years ago, just about this month. I started in the biodiesel business, morphed into more renewable diesel, and with my good friend Jim Potter, got into the RNG space at about 2018. And since then, I've ridden the roller coaster, mainly up, of the RNG rapid development. I spend a lot of time in RNG funding and deal with banks and private equity firms, developers, and try and help them advance their causes together. This morning, I released my July report to my clients. What you're seeing here today is the tip of the iceberg of that report. I share with them a lot more proprietary information than I'm able to share today, but suffice it to say, hopefully, you'll learn a little bit today. I know you're all veterans and hope I'm aiming high enough for you today. If I don't answer your questions today, feel free to reach out. My contact information is on this slide, and it'll be on the slides that you get from Paul after the show. Happy to talk to anybody. So if you're going to remember anything I say today, remember that if we resolve the 45Z situation favorably, which we all believe we're going to do, the real crucial issues remaining are offtake availability and the USDA funding pause. No longer really credit pricing. 6 months ago, I wouldn't have been able to say that. But credit pricing is firming. So the problems remain offtake availability and the USDA funding pause. And now we're going to talk about credits for a little bit and talk about and watch them firm up right before your very eyes. So here's what's happened in the last 6 months since the beginning of the year to the credits we care most about, especially for people who are selling into California. These are the merchant credits that stack up to make RNG so valuable selling into California. The D3 RIN, the one that handles manure and landfill gas, is up 13%. incredibly, the D5 RIN is up 137% since the start of the year. I'm going to talk more about that, but I want you to look at really carefully how closely the blue and green lines are now and how far apart they were at the beginning of the year. I'm going to explain that a little bit more as we go through a couple more slides. LCFS has gone up 35% over the course of this year, which is exciting and firming and anticipated. CFR is on a upward roller coaster as well. 445 at the end of last month. A year ago, it was at 215, 107% increase, creating some incredible values for RNG into Canada. And I think that is going to become an outlet until Canada gets filled up like California did. So there's four themes I talked about this month with my customers. As Drew said last week on last week's show, and I'm going to expand upon this a little bit, and I've been talking about it all year, or I've been talking about it really since March. Once the EPA released the very, very high D4 and D5 renewable volume obligations, the D3 price became much more important and much more affected by what's going on in the D4, D5 market. So you now have another market to pay attention to because, quite frankly, the EPA set the D4, D5 RINs or RVOs way too high, and they will not be achieved because, and I'm going to talk more about that in a bit. My next point is we all know, and I said before, California is strengthening. The credit bank is finally drawing down for the first time since 2021. So we're starting to see a nice upward slope to that curve. Mid-June, 45Z started to firm up a little bit. We got some good indications from DOE that they're going to release, hopefully, a positive GREET model that will recognize manure at a decently deep CI and create the values we had been hoping for. Importantly, they also clarified that these changes will definitely be effective starting this year. There was some thought that if they took their time and kept treading water, that the changes might not be effective until next year, but they will be effective this year. That was part of what we learned in June. And I've mentioned Canada. Canada's become was a secondary market. Now it's thriving. Several of my developer clients are already selling into Canada. US developer clients are already selling into Canada. And those that aren't are definitely thinking about it. I was on a call today, a very positive call discussing moving California offtake to Canada. Okay, here's a tricky slide. I'm sorry there's so many things on it. You probably all already get this, but I'm going to spend a little bit of time on this one. We used to look at the D3 RIN against the D3 RVO every year and say, are we going to hit the RVO? And if we're not, the D3 RIN prices would go up, good old-fashioned supply and demand. Well, we are going to hit the D3 RIN RVO this year. There will be enough RINs produced. You can see over in this slide, I currently estimate, based upon the latest EPA release, which came out June 18th, that we will produce 1.4 billion D3 RINs this year versus an RVO 1.36. Ordinarily, that would mean that there would be bearish pressure on the D3 price, but guess what? There's not. There's a technical surplus of 40 million RINs, but it will be easily absorbed by the D4, D5 via the nesting demand, which I have shown in this box. Just suffice it to say that the D3 RINs can also satisfy all the other RIN categories. So when I tell you that I am currently projecting a shortfall of almost 1.9 billion D4, D5 RINs this year, over a billion for next year, we're going to be using these threes to satisfy fours and fives going forward. Uh, the D5 price is at an all-time high, and that is both good and bad. The D5 price is at 251, exceeding the prior cyclical high of $1.80. That's a big number, 251. And it's increasing compliance costs for refiners, and they're starting to notice. Uh, and so the good news is for us D3 people who care about it, uh, that the good news is that the D3 is being pulled up and will be supported by the D5 price. One way to look at it is that the lowest in a shortfall situation, the lowest a D3 price can go would be the D5 price. It's a floor, uh, but there's bad news embedded in it as well. And I want to look down in the lower left corner. There's already a lot of political pressure from our fossil friends and their trade groups, and they've actually sued the EPA over these very high D4, D5 RVOs and the fact we all know they're going to be missed. So there's a chance that the EPA may reverse themselves. I think it's less than a 50% chance, but we need to watch this month to month. We need to watch every single month when the RIN report comes out as to exactly how far we're going to miss this by and how much pressure is going to come. And we know it's the age-old battle between farmers and fossil fuel guys. And the farmers won big, big time with the D4, D5 RINs, RVOs this year. We'll see if those hold. I still think they will. So in the meantime, we've got a very healthy and D3 and a floor underneath the D3 of the D5 price.
So, Peter, this is fascinating. I was unaware of this massive shortfall projected for the year end on D5, D4, and D5. And D5, of course, is food waste RNG, but it's also any non-cellulosic derived RNG, right? So
Yeah,
there's all kinds of ways to make biomethane that don't fall neatly into any of these buckets, and they would fall essentially in the D5. Do you think that this, I mean, clearly it's a political question whether the fossil guys or the farmers will win this, but do you see that this is a persistent trend that D5 is something that a project developer could actually rely on or include in their financial model?
I'm gonna. This is unique because the EPA made a mistake, and they actually made the opposite mistake the last time they set RVOs. They set the D3s too high and the D4, D5s too low. Uh, and then we had a complication where the 45Z doesn't apply to foreign fuels, and so we had bio-based diesel fuel production in the U.S. fall off a cliff last year, went way down, and so we also have uh, a trade dispute with China, and they basically, despite what you may hear, they stopped buying soybeans. And so, to ameliorate the farmers, the EPA said, well, here's how we'll solve the whole problem. We'll just make a massive RVO. We can use soybean oil to make bio-based diesel, and that'll take care of the soybean farmers. Well, they made it so massive that we're not going to be able to hit it. There's a shortage of feedstock, there's a shortage of production. I'm tracking every single month exactly where things might happen. I don't know if I'm sure a lot of people read Farm Doc Daily. It's the definitive source around RINs and feedstock and so forth. And they also believe that there's going to be a massive shortfall. This is my calculation for this month. It'll change for next month. I have a formula where I come up with the shortfall. I don't think you can. I would rely on this. I say 60% chance you can rely on where what I'm talking about through the end of next year because the RVOs are set for next year, through next year. But this little green box down here, the
Right. So
political
it's a
press,
snafu, basically. It's a snafu.
yeah, and
Yeah.
Republican or Democratic administration, Republican or Democratic EPA, they never get the RVOs right. And it's just, I'm used to it. And the farm versus fuel debate has been going on longer than when I got in the business 20 years ago. It's always there. Sometimes the farmers win, sometimes fossil wins. Okay, LCFS.
One other question there, Peter. On those,
Sure.
if you go back one slide, on that
Sure.
1.4 billion number of D3 RINs generated or expected to be generated this year, is there any possibility that some of that is K1 RINs that never get separated?
I'm taking into account net RINs generated, and I've got a formula that takes last year and this year and puts it on a trajectory, and takes out net RINs generated and available. So I take out retired RINs, I take out all the little nuance. I believe we're going to hit 1.4 billion versus an RVO of 1.36. Next year, I think we'll be at least 1.5 versus the RVO of what, 1.42 or something like that. We're going to be over, but our shortfall, our overage is minuscule compared to the shortfall of the D4, D5. So we can be absorbed into the nesting demand.
Yeah. Well, for anyone listening, I think that's a huge reason to reach out to Peter following this and talk to and learn a little bit more about how he calculates that number, because that would mean that he's taking a good hard look at how much dispensing capacity there is, how many voluntary buyers there are in the market, where all of this pie gets cut up.
Yeah, it's actually, if you really understand the EPA's monthly report, it gives you a lot of information if you play with a little bit and take out the retired rent. Anyways, I'd be happy to talk to anybody about it. It's fun. It's I don't know. It's more fun than it should be, I guess. Let's see. Let's talk about LCFS. 75 bucks on last week, been running in the mid 70s. This is really important. There's a futures market for LCFS that people are really starting to pay attention to. And the futures market is pricing LCFS at 76.75 at the end of this year, 81 bucks at the end of next year. So if you're thinking about where it's going to go, watch this market. If you're trying to do a financial, I would plug into this market. I actually think it's going to be higher than 81 at the end of next year, but I would be very comfortable using 81 if I were investing in or underwriting a loan for an RNG project that is counting on LCFS credits. We all know why they're going up. There were changes that were effective the middle of last year. California also produces an incredible spreadsheet once a quarter. You can get it down to the molecule in California as to what's really happening. And I have formulas that project where things are going. And I'm comfortable not only at the ICE price, I'm actually comfortable a little bit higher than the ICE price going forward. Okay, here's the fun part. Here's a little financial. Can people see all sides of this, Paul?
Yes.
Yeah.
Okay, you can see the right side as well. Okay. We all know that when you sell into California, there's a revenue stack for RNG. Here's what it was at the end of last week. Natural gas was $3. The RIN value came up to $22 based upon $2.73 RIN and 70% retained by the project. The key is, how much can the project keep? I put 70% in here. People are keeping 80%. I put in 70 for a reason. I have a client who, to get into California recently, has been giving up 35 and 40% in dispensing and commission fees. So be very, very careful. So I use 70 for this example, for this financial. I set up the LCFS at a minus 225 CI and a 50, so that comes up and 70% retained. 45Z tax credit, I think it's going to be higher than 20, but you've got to net it down because you're going to sell your tax credits. You probably get 85, 90% of your tax credit. Total MMBTU value of the project of $60. I need to move this. There we go. For a typical plant producing 400 MMBTUs today, you can see the rest of the calculation, 8.7 in revenues, 3.3 in expenses, EBITDA of 5.3. Here's the most important number that we look at right here. What is EBITDA over debt service? I'm assuming a $25 million loan, 15 years, 8%. We get 1.79 or 179%. That's a good number these days. That's something that a bank probably still would want a USDA guarantee, but maybe not. A bank would loan into a situation like this, certainly with a USDA guarantee, and equity would probably be comfortable investing in this. This is a snapshot of what it would have been last week. A real financial is hundreds of pages long, not a simple PowerPoint slide, but it's fun to look at it this way and realize, very importantly, that the values of the RIN, the LCFS, and what will be the final 45Z tax credit give us a meaningful debt service coverage ratio and a workable project.
At a not huge scale, 400 a day.
400 a day is not small for a dairy.
It's not small, but it's not massive either.
Right. And obviously the expenses will vary considerably by project. I used an average of several projects that I looked at. Okay. I talked about 45Z. We're hopeful that by the end of the summer, that's what we're hearing, we're going to have clarification and a tradable tax credit and a sellable tax credit. The tax credit I put in was $20. If you look at the most optimistic side, it could be 50, 55. I don't think it's going to go there. I don't think politically that's going to happen. But I've been telling people 25, 30 could happen. We're about to know what's going to happen, so we won't have to guess for much longer. Canada, 445 at the end of last month. That's a big number. You saw how quickly it went up over the last year. So what does that translate to? Remember, I was at $60 into California net. Gross out of Canada, US dollars, if you take a 200 minus 200 CI and a 445 CFR price, it's worth around $90. Now, I don't know how much you're going to net out of that, but 90 versus 60 is a big difference. That's why people are looking north and smiling. However, it takes a long time to get approved in Canada. And so I'm really only working with existing projects who might want to go there, who can parallel track Canadian approval and keep whatever cells they have going on in the background in a parallel fashion. And when they finally get approved in Canada, I was told today, 12 months for an operating plant and much longer for a first-time U.S. project. ECCC timing is very hard to predict right now. They seem to have slowed, kind of reminiscent of what went on with CARB. But you can work in parallel and you can keep optionality. That was something I learned just recently. Couple of things to watch out for. We know that the Liberals were reelected recently last year. Kind of a backlash to what went on in the U.S., but the Conservative Party platform had been to abolish the CFR. The Conservatives won't go away. There are regulations coming to prefer domestic fuel, and we all know Canada has dispensing capacity limits. How soon will Canada be saturated? I don't know enough about Canada yet to know when that's going to happen. I didn't know enough about California to know when that was going to happen. Uh, and then we need to think about what will the next set of RVOs be. They're due by November 1st this year. I doubt that our friends at the EPA will get there, but where they go, and it's kind of, you can't really guess where they're going to go. Uh, I think they will be informed by the shortfalls in predicted shortfalls in 26 and 27. Be very important to follow what happens with the RVOs to predict the value of the D3 and D5 RINs going forward. Um, Here's what I'm thinking about in terms of risk. I'm repeating myself, but if by chance 45Z GREET slips, we're still okay. We know that we're okay for 26. I'm more relaxed about that than I was before the June release. My biggest concern, as I said before, is the EPA might adjust down the D4, D5 RVOs or have lower D4, D5 RVOs than they ordinarily would have had going forward, 2028 and going forward. Maybe renewable diesel operating plants will come up to speed faster than predicted. I doubt that's going to happen, but that would stop the whole nesting thing that I talked about. Might California elect a Republican administration? Probably not, but if they do, it would affect the LCFS. Could the CFR be abolished, saturated, or devalued? Maybe. So we need to think about that. Nothing's a sure thing in this business. Finally, the USDA biodigester loan may go beyond the end of this year. It may go forever. I talked to some bankers who think we're never going to see USDA loans into biodigesters again. I hope that's not true. I had 60 projects ready to go before we ran out of offtake and USDA loans. I'd love to see those go forward, but those are all stalled. Anyway, same bottom line as I started with.
Yep. Peter, phenomenal presentation. Thank you. I'm sure there are other questions, but just one on CFR. It seems to me that the bottleneck at ECCC is somewhat to blame for the high price, and that if more pathways were issued, you would see the price resolve. And given the political hot potato nature of that whole policy, I would think the Liberal government would do anything in their power to staff up and fix that problem. Do you have, I mean, does any of us, I don't know if you do, or I don't, but does any of us see anything hopeful on the edge with ECCC or?
I don't have a view on it. I don't know enough about it. How about you,
Yeah, well,
Drew?
some of the news that's come out of Canada recently indicates that the uh, there were some discussions about targeted amendments, which would include a domestic content mandate or credit multiplier, which would have a negative impact on U.S. production, U.S. RNG production, in order to try and support more project development in Canada. Sounds like that timeline has been pushed back at least into mid to late 2027, with the establishment of the escalating compliance requirements for post 2030 decade also being pushed back. So yeah, short version of that is basically we have at least another 9 to 12 months, give or take, maybe up to 18 months before it's something we really need to dive too much into our thoughts.
No, yeah. Well, if there's anybody watching today who has any touch with Canadian policy or Canadian Biogas Association can check in, but there's a risk. Like we all love high prices, but there's a risk that it makes the policy too painful.
Yeah, well, I mean that's the key point as well, is that high prices can cause crashing prices, because if you get too much publicity, that's negative publicity about rising compliance credit prices, increasing the consumer cost of commodities across the board, or in this case, fuels, then you're going to have, a knee-jerk reaction to it within the political party. No matter whether it's Democratic or Republican, it's always going to have some kind of response to the effect of, oh gosh, we don't want that bad outlook.
Right.
Just looking at the math, when I thought about where it might go, I gave the CFR a pretty good haircut over the next 18 months in my release this morning.
Yeah. It has to come down from that price. I
Yeah.
mean, it has to.
It has to come down for that price, but how much higher will it go before it does as
Yeah.
well?
Okay.
I've got some other people projecting significantly higher prices. But I also had people projecting that we would hit $100 LCFS prices by the end of this year.
Right.
These are there's a lot of factors involved in estimating these prices, and it's not easy.
Question came in from Jim. Dispensing seems to be increasingly saturated, impacting producer D3 RIN retained value share. Do you see any change in this condition in 2026 to 28?
And Paul, that actually also coincides well with George's question that we may have missed right before it. Has the gloomy mood called RNG? The mood in RNG seems to have been gloomy the last year. Has a gloomy mood caused any reduction in RNG and D3 RIN production? Those two things kind of go hand in hand. And I will say, from our perspective, it seems like project developers as a whole have been in a gloomy mood over 2024, 2025, and going into 2026 had kind of the perspective of, we're expecting this kind of an RVO. So it seems like project development has continued to march forward, which means that, at least the K1 RIN production will continue to and has continued to increase.
Yeah.
I,
Cool.
I think what I look at, and this is really important, in May of last year, up until May of last year, D3 RIN production was on an upward trajectory. In May of last year, it absolutely plateaued and has stayed plateaued since then. I think that's a function of dispensing capacity being reached. I think it's a function of the D3 price was stalled for so long in the 230 to 240 range. And I think it was a function of the fact that no one trusted the EPA to come up with decent RVOs for D3s, and they did not. So look at the production, the net production of D3 RINs since May of last year. You're going to see a flat line.
Yeah. Well, but we're at least on our firm have also seen a number of stations that have shut down in the last 2 years as well.
Wow.
So the conflicting component of that is EV adoption.
Good.
Right.
Tell you what, we're at time. So Peter, that
Yeah.
was a very wonderful presentation. Thank you for your time and effort there.
You're
So
welcome.
we close our shows out with Drew. It's going to take a few minutes on offtake.
Yeah, I will make this relatively quick today because Peter's covered a great presentation today, and it covers a lot of a lot of the things that I would usually discuss. But I will say that we are seeing offtake agreements getting executed that allow buyers at trade type shops optionality. And if your project provides optionality, there's a significant demand for volume there. Now we're also seeing RNG offtake get contracts deals getting done, stumbling on my words, that are providing floor prices. The floor prices have come down a bit, but there also are opportunities to do deals with companies that will say, look, we recognize that your project isn't going to have an ECCC pathway this month or next month, or maybe even not for the next year, but we will provide some capital injection in that interim period. And that's extremely positive outlook for the market.
Cool. Well, great. So we'll call this week's episode. So stay tuned for Biogas TV Season 6, the Power Brands virtual trade show coming up later in July. And with that, thank you, Peter, for your wisdom. Drew, Alex, great to see you guys. Allie, we're going to have a great virtual trade show together. So everybody, we'll let you run. Thanks for your time. We'll get the slides out here soon. Have a good week.